Breaking. The Federal Reserve just issued a chilling statement about the U.S. economy, and most people have no idea what's coming. For the first time since 2022, the Federal Reserve is warning that the U.S. economy is expected to shrink in Q1 of 2025. This isn't just a slowdown, it's a potential recession. If you remember what happened in 2022, the last time we had 2 consecutive quarters of economic contraction, the stock market crashed by nearly 20%. Are we about to see the same thing happen again? In this video, I'll break down Keycap 1 what the Federal Reserve just said and what it means for you. Keycap 2 the real reasons behind this economic contraction. Keycap 3 how it could impact the stock market, cryptocurrency, and your investments. Keycap 4 what you can do now to prepare and potentially profit from what's coming. If you want to stay ahead of what's happening in the economy, make sure you hit that like button and subscribe. Let's dive in. So, what did the Federal Reserve actually say? The Atlanta Fed just released a report stating that the U.S. economy is not expected to grow in the first quarter of 2025. In fact, they're predicting the economy will shrink. This would be the first quarterly economic contraction since early 2022. And if we get 2 back-to-back quarters of shrinking GDP, that's the official definition of a recession. Small diamond, but here's the catch. There's no clear reason why. Small diamond the Fed didn't provide much explanation, just a simple statement that GDP is expected to fall. Small diamond so, let's break down what could actually be causing this economic slowdown. There are 3 major factors at play here. One of the biggest reasons for this contraction is a massive spike in U.S. imports. Businesses are rushing to buy goods now before tariffs from the Trump administration go into effect. MarketWatch reported that this surge in imports is artificially lowering GDP. Why does that matter? Checkmark when businesses import more, it technically reduces GDP because those dollars are leaving the country. Checkmark this doesn't mean businesses are struggling. It just means they're stockpiling ahead of potential price hikes. Checkmark but, if this trend continues, we could see supply chain issues and inflation rise even further. This is why the stock market is nervous. Nobody knows how these tariffs will impact trade, business, and inflation long term. Right now, we are seeing massive uncertainty across multiple industries. Checkmark tariffs on China, Canada, and Mexico are creating trade tensions. Checkmark artificial intelligence is disrupting entire sectors, causing layoffs and new opportunities. Checkmark the government is making sweeping regulatory changes that impact businesses and consumers. Checkmark crypto is in chaos, swinging wildly as new policies are introduced. Uncertainty is poison for the stock market. Investors don't like unknowns. When people don't know what's coming, they pull their money out of riskier investments. That's why we're seeing high volatility in both stocks and crypto right now. And let's not forget, every dollar spent in the economy is a dollar of income for someone else. If businesses start slowing down spending, that could create a domino effect leading to a real recession. Did you know the U.S. national debt just crossed $36 trillion? Last year alone, the government spent $2 trillion more than it collected in taxes. This kind of deficit spending has consequences. Checkmark short term, it boosts the economy. Checkmark long term, it leads to inflation, higher interest rates, and economic instability. And here's the kicker, when inflation runs too high, the Federal Reserve steps in. They can slow the economy down by raising interest rates, which makes borrowing more expensive. This is what led to the 2022 market drop, and it could happen again. The stock market hates economic contractions. Historically, when GDP shrinks, we often see major stock market corrections. But there's a silver lining, these downturns can create huge buying opportunities. What about crypto? Bitcoin had an insane rally earlier this year, fueled by optimism about Trump's pro-crypto stance. But in recent weeks, we've seen major crashes and recoveries. Trump's latest announcement about a strategic crypto reserve has caused even more volatility. Moral of the story? Checkmark markets are unpredictable in the short term. Checkmark but if you understand the long-term trends, you can find massive opportunities. And that brings us to the most important part of this video. If we are heading into a recession, or even a market correction, you need a plan. Here's how to stay ahead. Most people panic when the markets drop. Smart investors see opportunity. Every major crash in history has been followed by an even bigger recovery. Now is not the time for short-term speculation. Focus on strong companies, dividend stocks, and real assets that hold value. Checkmark. Consider investing in gold, which has been soaring in value. Checkmark. Keep an eye on real estate and data centers as AI expands. Checkmark. Look into energy companies, which could benefit from rising demand. And most importantly, make sure you're staying educated. We don't know for sure if we're heading into a full-blown recession. But we do know that massive changes are happening right now. Smart investors don't just react, they plan ahead. Checkmark. The biggest investment opportunities in 2025. Checkmark. How to prepare for a market correction. Checkmark. The impact of AI, tariffs, and crypto on the economy. If you found this video helpful, hit that like button. Subscribe for more updates on the economy, investing, and financial strategies. Drop a comment below. Do you think we're heading for a recession? Why or why not?